Hey guys, welcome back to Dawn Investments. In today's video, we're just going to go over some of our, more traditional swings and how you can find those kind of swings, why we trade these kinds of swings. Getting into the video, before going over the stock, I really just want to explain, swing trading. I use swing trading as more of like a safety, like it's a safety net to balance out day trading losses, and I also use them as more safer investments because these trades are, to me, in the past, if you trade them correctly, are more so, I don't want to say guaranteed to go up, but have a better chance of reaching price points rather than intraday trading where you can experience sharp losses. If you play the right swings correctly, you can see great profits. But getting right to the video, I wanted to go over some of the swing trades that I find to be pretty consistent and I use pretty often. The first one that I want to get into is DGAS. It's pulled up right here. Right now it's around $32, $31. Looking at its 180-day chart, it's hitting a resistance at this point around here. Looks like it has a little bit more to go to like 33. But we called it out like last week, and we've been holding it on from I think around this price point. And, today we hit around 30% and we sold. And because from right here there's a resistance, and we believe it could trend back down. But just because it's at this point doesn't mean we're going to ignore it. We're going to send an alert for right above this price point right here. And this is just to notify me if it continues to trend upwards. Because if this alert goes off, I'll go back to the stock and analyze it and see if there's significant movement. And if there is, I may even jump back in for a continuous swing. But for right now, I'm out with my 30% gain on the stock after just maybe a week or so. And yeah, I'm probably going to stay out until it trends back down. Another stock that I like to swing is UGAS, which is another gas stock, just like DGAS. This one's on its downtrend, and it's actually near its support. And I'm actually waiting for it to show upward momentum for it to bounce up. I'm not trading it now, but this is something we usually swing to. Right now, as you can see, it's by support. It just broke it a little bit, and I'm waiting for it to start bounce back up before I jump in. I have alerts set, and I'm probably going to add some more alerts after the video just to keep an eye on it better. But yep, this is one of the ones that I like to watch as well. Another swing that we've traded a lot in the past, that I'm also waiting for upward signs, is JNUG. This is the same kind of thing. We traded in the past when it went all the way up. It's climbing back down right now, and I'm waiting for a sign, an upward confirmation, some type of signal that tells me that it's going to continue to rise, and then I'll jump back into this one. And then it's inverse JDST, same kind of thing, more expensive. It's a little bit up right now, and as this begins to downtrend, we'll get out of this and then start trading JNUG, because JNUG and JDST are like opposites. You can do more research into that, but they kind of trade in an opposite way. So as this is down, JDST is up, kind of thing. And in the past, we've traded AMD a lot. I know I've called this out before. Right now, it's also at a low point. And right now, I'm also waiting for this to show upward signs before I jump in. And then once it shows those upward signs, I'll jump in for a quick swing. Maybe I'll look for around 7 to 12%. It has a profit of potential for way more. I think maybe it might be, it's around 20%, 26%. But I'm going to only look for a profit of around maybe 7 to 12%. And from there, I'll sell and then wait for another good entry point. Yeah, and those are pretty much my consistent swings. The swings that I trade on a frequent basis. Of course, I get into way more swings, but those are just the ones I feel like I trade the most in terms of getting in and getting out and repeated trades. Because I trade these at specific points, because with these specific swings, I I understand where good buy points and good sell points are for these stocks, and that's what I'm going to get into now, how you can determine these. So I've watched multiple swings for some time, and based on all the swings I've found, there are more stocks that I found that can go with the rules I'm about to explain. But these are the ones I just choose to swing on a consistent basis. But there are definitely more stocks that you can apply these rules to, or that you can analyze in this manner. So please don't just feel constricted to the five stocks I just went over. Those are just the ones I like to, pay attention to in terms of repeated trades for, future reference. But going to DGAS as an example of to what I look for in the swings. From a technical standpoint, the five stocks I went over from a technical standpoint all have one thing in common, and that's that they have set and defined patterns that I can trade with. As you can see with DGAS, for example, it goes up, then it goes down, it goes up, then it goes down, all to pretty similar resistance and support points. Right here, there was a support here and resistance here. It did that for some time. I used to trade it over here, and then it broke, and then I traded it once it broke this line as well at this point, and then I sold up here once it started. I didn't sell at this exact point. That would have been kind of hard. But once it started downtrending down, I noticed once these EMAs crossed over on the 180 day, and I sold it, creating a new resistance right here. It downtrended it again, and then it reached the old support right here of around 2270, and this is the most recent support right here, just 2270. This is where we found it. This is where we called it out, but we didn't buy until it broke this previous support right here, which is a new resistance. It broke this recently. I think it broke it last week. The EMAs crossed over. We called it out on our Discord, and then we jumped in. We jumped into the stock because we know that in the past the stock has gone up to $33. As of recently, too, I believe just 2 weeks ago, it's at $33, and it bounced all the way down. So we believed it can reach that price point again. We didn't know how long it would take, but we jumped in with a decent size after it broke this resistance, and we rode it all the way up till today. And lo and behold, it went back to 33, and we sold it for around 30% profit. See, and now we sold it here because it reached its previous resistance point. Now, yes, it can break this resistance point and it can reach new highs, where the chances of that happening isn't really, the best. It can happen, anything can happen on the stock market, but we don't need to take that chance. What we believe will happen is that it will test this resistance and then it'll start trending downwards. That is what we believe will happen. But like I said, anything can happen and it could break this. And if it does break this, we have an alert set and we will jump back in. But our next play, we're probably not going to trade DGAS again for a while unless we're shorting it until it reaches a previous resistance, a previous support. So we're probably going to wait for it to come all the way back down to either this previous resistance at 26, or preferably back to this previous support here at $22. And it'll take some time for it to come down. That's about a 30% loss. So wait for it to come back down here, and once it tests this point right here, and then it starts to trend back up, we'll do the same thing. We'll trade it again, wait for it to ride up, sell. And this idea, this buying and selling at certain predicted points, is the concept we apply to the other 4 stocks I mentioned earlier in the video. For example, let's go to UGAS. Here in UGAS, it's similar buy and sell points. If you look closely, it bounces off a support, it goes to a certain point, and then it comes back down off the same support, goes back up, and this time it actually broke the support, and we're waiting for our confirmation on the 180-day chart. The EMAs crossed over, we jumped in, and then we rode it all the way up for around, I think it was around 15%. This was a couple weeks back, and we sold it, and now we're turning back down again. So here for you guys, we're getting to a point where we would like to rebuy. It can keep trending downwards, but based on its previous trends, it may not do that. But you never know, just because we're not looking at its fundamentals right now. We're just looking at its chart. But something in the fundamentals can be driving the stock down. That's why you always have to wait for signs of upward confirmation. Because if you don't, and you just jump right now because this is a previous support, you have the chance of losing a lot of money because it can keep going down because you don't know what's going on with the company unless you've done your research. But right now, yes, in terms of swings, we're paying attention to this. I would set an alert, around here when it breaks this candle's line, and for confirmation on the 180-day chart of two EMAs crossing over in a upward in a bullish move in a bullish manner. So once that happens, we would jump in, and then we would, let's say it happened right here at 850. We would buy in and then sell at its previous resistance here at around 1130. Of course, we would probably sell a little bit earlier just so we don't get caught in between, a lot of price action. So we would probably sell, around 1110 for that's even a lot for us. I'll probably just sell it like as it's breaking 11 for around, 28, 29% profit after holding it for maybe like a couple of days or even a week or longer, but nothing more than a month. For me, just personally with you guys, I want to hold it for more than a month. But so yeah, once it starts showing those signs, I will hold it for that long and then hopefully get that profit and then sell it and then wait for it to come back down and do the same thing and then do the same thing over and over again. Again, yeah, I just wanted to point out that this this pattern recognition does not only have to be applied to the stocks I've named. It can be applied to so many different stocks. I just don't want you to think that, we're just saying this pattern can only be applied to these specific stocks. It can be applied to any type of stock. And we've actually seen these patterns in other swings that we haven't mentioned in this video, but that we would mention in the Discord as it pops up or breaks our alerts. So keep an eye out for that. But just in terms of the ones we've traded most recently, in terms of the past couple of weeks, it was these past five: the UGAS, EGAS, JNUG, JDST, and AMD. But there are so many more stocks that this has set up patterns that you can really play to your advantage. So as you're looking for swings, especially for swings that aren't exactly penny stocks or a little bit more on the, I won't call them expensive, but a little higher price than your average penny stock, those ones really do usually play their patterns correctly for future points, so you can feel kind of assured that it won't like go out of the ordinary unless something drastic happens with the company. But if everything stays normal with the company, it should play towards its previous patterns, and you should be able to predict where you should buy and sell the stock. And also keep in mind that you may not have to wait like weeks or days or even days for some of these patterns to happen. For example, looking at the past charts for AMD, for example, before its whole business was going on with its earnings and its partnership with Intel, all the different fundamental stuff happened in the company that it's going to make it form a different set of patterns. But before all that happened, it followed the same set of the same set of patterns for a while, as you can see here. It went up, came down to this trend line, went up, came down to this trend line, went up and came down. And this is something that we took advantage of. We bought here at this line because we believed that it would follow its pattern and go to a certain point. We would sell here and wait for it to come down, then we would buy again, ride it all the way up until we saw a sign of a downtrend, which was for us these EMAs crossing over. We bought it. We bought it at this trend line, went up. But and please keep in mind that we're not just buying it at trend lines. We're buying it at trend lines with the addition of a sign that it's going up. Because if you just buy stuff at trend lines, sometimes that's a little bit risky. Like for example here, if we would have just bought it at this trend line, then we would have lost money because it kept going down. It didn't bounce back up this time. something could have happened with the company, or something that, we may not have been privy to, and it started going back down. So always keep in mind, always wait for the sign of upward momentum. Don't just buy a trend line just because. So for right here, we sold up here, and then it came down, but then it kept going down. So we waited for a new support, which happened to be here, and then we waited for the sign of upward momentum. We actually didn't trade this one because we weren't sure. We wanted to, figure out the pattern first, and then we actually figured out that pattern next. Found it here. We waited for the sign of two EMAs crossing over and a couple other signs. It didn't form the EMA crossover at this first point, if I remember correctly, but it did on this next one, and it was a double bottom, so we decided to buy in, and then we saw its new support and resistance levels. So all I'm doing is the way I'm explaining this. I just want you guys to really understand that these patterns happen so often with multiple stocks, and you should always keep this in mind when you're making swing trades, especially if you're making a trade on a stock that has these patterns in the past. Like, for example, if you maybe just discovered DGAS, really pay attention to its chart and don't trade it while it's here just because it's, on an uptrend. Just because something's on an uptrend, that doesn't mean it's a good trade, because it's on an uptrend here. And if you would have bought in here, there's a high chance that you could lose money as this can trend down. And there is a slight chance that it can keep going up, but it's up to you if you really want to take that risk. So that's really it for the video. I hope I explained it well. If you have any questions, let me know, and we'll try to keep calling out more swings in our Discord, or you can private message me or anything like that, and I'll try to, call out more swing trades for you guys. So hopefully you guys take advantage of some of the stuff I shared in this video, and good luck trading.